Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at Partnerships Activity 3. In this activity, we are going to focus on the notes to the Statement of Financial Position. So we are going to look at what is new. In a partnership, the equity consists out of capital and current account. So those are my two new notes to the Statement of Financial Position. So if we look at capital, the ledger account, on the credit side, we would always have the balance brought down. Did the partner contribute any additional capital? Did the partner take any of his or her capital? And then we calculate our new balance. The note works exactly the same. We will have capital, partner A, partner B. It all depends on the number of partners that we've got. Each partner has its own capital account. It consists out of balance in the beginning. Was there any capital contributed during the accounting period? Did the partner take any of the capital, any withdrawal of capital? And then we calculate the balance at the end. Withdrawal of capital must always be shown in brackets. To calculate the total, we are going to take partner A plus partner B equals. At the end, when we are done and we take the balance in the beginning plus contribution minus withdrawal equals the balance at the end, and we take the total of partner A, total of partner B, it must be exactly the same. When completing a current account, we have a current account for each partner, partner A, partner B, and again, it depends on the number of partners that we've got. So in this note, I've used now numbers or amounts so that you can see exactly how it works. So step number 1 is record the net profit from the income statement. Remember, when we're completing financial statements, in our income statement, we will calculate our net profit for the year. And this now needs to be distributed. Step number 2, calculate the primary distributions of profits. So to calculate the primary, it's your partner's salary plus interest on capital plus partner's bonus. Step number 3, calculate the remaining profits or the final distributions of profits. This will always be the net profit, which we've calculated in our income statement, minus the primary distributions of profits. And now the final distributions of profits will be shared according to a specific ratio. Step number 4, calculate the profit per income statement. To calculate the profit per income statement, it's always your primary distribution plus your final distribution equals. Please do not take the profit per income statement and distribute that according to a specific ratio. This is the common mistake. It must be your final remaining that will be calculated in a ratio. To calculate the profit per income statement, it's primary plus final. If I've done these steps correctly, it means that the profit per income statement partner A plus profit per income statement partner B must equal the profit, the net profit for this year. Step number 5, record the total drawings for this year. This must always be shown in brackets because we need to subtract it. Step number 6, calculate the retained income for the year. So to calculate the retained income for the year, it's my profit per income statement minus the drawings during the year. Step number 7, record the income in the beginning of the year. Always remember, this is equal to the current account balance from the pre-adjustment trial balance. A debit balance must always be in brackets because we're going to subtract it. It means negative. A credit balance will always be no brackets. Step number 8, which is the last step. Now we can calculate the retained income at the end. This will be the retained income for the year plus or minus the retained income in the beginning. If it's brackets, we need to subtract to get the final amount. If it's no brackets, we need to add. Please make sure that you understand this note 110%. This could be asked in many different ways, where we need to find missing figures, which we are going to look at the later activities that we're going to do later on. If you compare your general ledger accounts with the current account note, please take note that the balances in the beginning is the retained income in the beginning of the year. If you've done all of this correctly, the balance at the end should be the same as the balances, the retained income at the end of the year. Take note, drawings, there's my drawings, primary distributions of profits is exactly the same. And then we have the final distributions of profits. Remember, in my general ledger, this will be calculated in the appropriation account. So whenever you are not sure about finding a figure in the note, you can always do a T account, completing the current account. Looking now at the activity, Gerald Leroux and Simon Brown are partners in Fast Distributors. Their bookkeeper could not complete the sections of the Statement of Financial Position due to family responsibilities. The financial year ended 30 April 2021. Required, complete the following notes to the Statement of Financial Position on 30 April 2021, capital account of the partners and the current account of the partners. Information A, they provided us with balances on 30 April 2021. Take note that the current account balances is in the beginning of the accounting period. And Gerald had a credit balance, Simon had a debit balance. Information B, they provided us with the partnership agreement. And then we've got additional information. Completing question 3.1, capital account. Extract from the accounting records, capital balances for Gerald and Simon on 30 April, which is the end of the accounting period. So if we now look at the information from Simon Brown, interest on capital of 10% per annum on his capital contribution. Take note, on 31 October, Simon contributed a vehicle towards the business to increase his capital contribution by $250,000. The additional contribution was properly recorded in the books of the partnership. The same as what we've done with the ledger accounts. We're going to always start with the movement. So if I start with the movement, Simon contributed $250,000. This was properly recorded, which means the balance from the pre-adjustment or on the 30th of April 2021 is the balance at the end of the accounting period. This means we need to find a balance in the beginning. Opposite calculation means now 750,000 minus 250,000. If we look now at Gerald, interest on capital 10% per annum on his capital contribution. Take note, on the 1st of September, Gerald reduced his capital account with 75,000. The reduction was not yet recorded. Because the reduction was not yet recorded, it means that the balance given is the balance in the beginning. Now we need to calculate the balance at the end. To calculate the balance at the end, we take 600,000 minus 75,000. To calculate the total, we are going to take partner Gerald plus partner Simon equals the same contribution per capital, nothing, plus 250,000 equals minus 75,000 minus nothing equals. Now we can calculate the end balance. We've got two options. We can either take the beginning plus minus, or we can say partner Gerald plus partner Simon equals, and the answer must be exactly the same. Completing the current account. Step number 1 is record the net profit. But now, if you look at the information given, the net profit wasn't given to us, which means that we will need to calculate it later on. Step number 2 is calculate the primary distributions of profits, which means we now need to find out what is the partner's salary, interest on capital, and the partner's bonus. So if we look at salary of Gerald, a salary of 5,000 per month less that than Simon. The amount less is due to less hours worked from the 1st of April 2020. Gerald decided to be less involved in the day-to-day running of the business. So if we now look at Simon, Simon has a salary of 480,000 per annum. So salary, Simon, 480,000. To calculate now the salary of Gerald, we have to take 480,000 divided by 12 to get the monthly salary, minus 5,000, and then we need to times it by 12. The salary allowance is always equal to 12 months. Now we can calculate the total by taking Gerald 420,000 plus Simon 480,000. Bonus, only Simon is entitled to a bonus 50,000, so the total is equal to 50,000. To calculate the interest on capital, we need to look at the capital account. Interest for Gerald is calculated at 10% per annum. On the 1st of September 2020, he reduced his capital. This was recorded. So what is important to know is the dates. From the 1st of May until the 1st of September is equal to 4 months. This means that the interest must be calculated on 600,000 at 10% for 4 months. From 1 September until 30 April is equivalent to 8 months. My new balance from the 1st of September, 525,000 times 10% times 8 divided by 12 equals 35,000. So my total interest is going to be 55,000. If we look at Simon, he's also entitled to interest on capital at 10% per annum. Take note, on 31 October, he contributed additional capital. This was properly recorded. To calculate the interest from the 1st of May until 31 October is 6 months. So on 500,000 times 10% times 6 divided by 12 equals 25,000, and then we're going to calculate on 750,000 times 10% times 6 divided by 12 equals 37,500. So the total interest earned is 62,500. In my current account note, we're going to have interest on capital for both partners, and if we add it together, it equals 117,500. Now we can calculate the total primary distribution by taking partner's salary plus interest plus the partner's bonus. Our next step is to calculate the remaining profits. So to calculate the remaining profits, we have to take our profit per income statement minus the primary distribution of profit. But now, if you take note, we don't have the profit per income statement. So let's see what has been given to us. They said, Gerald, the remaining profit and losses are shared in a ratio 3:4. Simon, now they specifically said his share of the remaining profits being 60,000. So if his remaining profit is 60,000, I can calculate, Gerald, what is he entitled to with regards to final distributions of profits? We're going to take 60,000 times 3 divided by 4. That equals 45,000. So the total final distribution of profits is 45,000 plus 60,000. I could have also said 60,000 times 7 divided by 4, and that would have been equal to 105,000. Now to calculate then, Gerald, we can take 105 minus 60,000. There are different options that you could have used in calculating it. Step number 4, calculate the profit per income statement. To calculate the profit per income statement, we have to take our primary distributions of profits plus final equals the profit per income statement. To calculate the total net profit for the year, we can take profit per income statement, Gerald, plus Simon, or we could have said the primary plus final. It should give us exactly the same answer. Step number 5, record the drawings. So if I look at the drawings, there's additional information with regards to Simon. On 30 April, partner Simon took the following for personal use: cash as a payment for repairs for his wife's car, 3,600, cash as a donation for his daughter's school soccer team, 5,000. Both these transactions have not yet been recorded. This means that we need to add this to the balances that were given to us. So 562,000 plus 3,600 plus 5,000 equals the total drawings for Simon for this accounting period. If I take Gerald, 572,000 plus partner Simon equals the total drawings for this year. This must be shown in brackets. Our next step, step number 6, calculate the retained income for the year. To calculate the retained income for the year, it's our profit per income statement minus the drawings for the year. Step number 7, record the retained income in the beginning. These figures were given to you on the 1st of May 2020. Credit balance means no brackets. Debit balance means brackets. 58,700 minus 42,000 equals the total 16,700. Our last step, step number 8, is calculate the retained income at year end. To calculate the retained income, it's the retained income for the year plus or minus the retained income at the end. Brackets means we need to subtract, no brackets means we need to add. So minus 52,000 plus 58,700 equals 6,700. 61,900 minus 42,000 equals 19,900. And now to calculate the total, if we take 9,900 plus 16,700 and we take 6,700 plus 19,900, it should give you exactly the same amount, 26,600. This is the amount that will appear on the face of your balance sheet. Thank you very much. We are going to look at activity 4, where we're going to look at different ways in which this could be asked. And I'm also going to show you how asset disposal can be incorporated into this section of the work. Hope you have a wonderful day. I want to just leave you with this quote. Success is not final. Failure is not fatal. It is the courage to continue that counts. Have a wonderful day.